With the commercial loans, the great thing is the interest rates have come down substantially to what they used to be. If we look at a loan now, say we look at a home loan at 3%, we could look at a commercial loan at 3.4%. So there's not a massive difference these days. And that's where I think people get the misconception that, they're paying such a high rate on a commercial space. You also might need, some overdrafts or some other sort of business lending. That might be a different kettle of fish, where they can be unsecured or secured under that commercial property, or even secured under your residential property. The idea is getting a full fact find from the clients, looking at problem solving and finding that solution as to what's going to suit their business needs moving forward. I think with the business, and whether it's a startup business or an existing business, cash flow is going to be the key there. So you might find that they've set a budget, or if there's a particular rental income coming in or a lease coming in, they know how much they want to spend per month on that particular commercial purchase. So really, you don't want a lender that is only going to give you a 15-year term. You might need a 30-year term to ensure that cash flow or the repayments are going to be at a manageable level. You've got potential redraws on commercial loans now. We've got offset accounts, which we never had before. It's really just getting an overall picture of what that client expects or what that cash flow is going to be beneficial to their business moving forward. So, for example, if that cash flow needs to be, or those repayments need to be at a particular level, you might find, okay, this lender is going to lend you a 20-year term at 4%. The other lender is going to lend you a 30-year term at 4.5%. That's going to be a massive difference to your cash flow. So at the end of the day, it is a tax-deductible debt anyway. So you've really got to, look at that space and what's best for your business, not so much what's that lowest rate. Because at the end of the day, you don't want to be stuck in a 20-year term and got the best rate, but then get into cash flow issues later. So it's really just understanding what your business needs moving forward, so we can, massage that loan and the advice from our end, moving forward.